All right, folks, game time. If you guys have any questions, I believe there's a comment question box where you can ask the questions. If not, just hit me up on email. I'll keep my email open too. So then, if you got something you need to talk about, I will get it. And I will be recording this, by the way. All right, let me get rid of this thing. All right, so a couple things I wanted to go over. Number one, a lot of people ask me about kind of like my weekly routine on how I get ready for the week. And so I'll go into, kind of my routine of what I do on Sundays. And Sunday's like my big preparation day. It's the day where I look and kind of analyze the market and kind of figure out what I'm going to be doing. And, and then also that's where I make my big list of stocks. At night on the weekdays, I'm adding a few things to my watch list, but really it's on Sunday where I go through, thousands of charts to really figure out, what potentially is going to go and when. And so I make two watch lists basically in essence. And one will be, watch list of stocks that are ready right now that I can use for tomorrow. And then I'll make another watch list of just stocks of interest that at some point can be ready at some point during the week. Maybe it needs 2 more days of flagging. Maybe it needs to pull back. Maybe it's a little bit too overbought. It can be a handful of things. And so I'm going to keep those on a list too, because really making watch lists is one of the most important things that you're going to do as a trader. So it keeps you organized, but it also gives you a full amount of plays that can potentially go. Because one of the things about scanning and stuff like that is, a scan really doesn't do much. I mean, you could take 5,000 stocks and turn it into 200, 300, and you still got to flip through everything and figure out the 10 that might go. And out of those 10 that might go, maybe really only 2 or 3 of them pop the way you want it to. And so it's really important to keep those watch lists updated because, you're going to be transferring a lot of the stocks that are still valid the next day over to the new day's watch list along with the new stocks. And so, that's really important to just constantly keep, updating these things and making sure that, you stay organized with that. Because otherwise you're going to be, messing up pretty much all the time and missing all the good plays. Kind of turn off some of this stuff. All right. So let's dig in here. So overall, we had a great week in the market. I mean, there's no doubt about that. What you can see here is, the market was up 5 days in a row. The S&P up 5.5%, right? Russell up 6%, Q's up 6.4%. So that's a pretty strong rally, and probably one of the stronger ones that we've had. The one thing that I always look for in a tell on whether, a market rally is a good one is whether, the NASDAQ and the Russell tend to lead, because that's what you want to see. When you see the Russell and the Qs lead, that kind of tells you that the risk trade is back on, that people have an appetite for risk. The last thing you want to see is the Dow Jones leading the way for the week on a big market bounce, because how many people can really load into United Technologies and IBM and say that it's a healthy market that's going to run, right? Those are old time stocks that are 200 years old and really have nothing to do with growth and things like that. So you don't want to see that happen. What you want to see is exactly what did happen, which was, the Qs and the small caps leading the way. And so what we're having for this week now is essentially a very important week in terms of we've had a very nice bounce here. And what's happening now is we're starting to get into the top of the range that we've been, talking about since August. And we're kind of at that pivotal point here. And so this week is going to be really telling in terms of whether this market has any legs or whether this was just an oversold type of, relief rally. the real nature of the rally is going to show its face this week, especially because we have a Fed meeting and some other important things that are happening. And so this week is really going to be important for us to be able to pinpoint, what's happening in terms of the week. So, in terms of, this week, I was making some notes for myself, and, one of the things I really notice about this market and why it's so hard is, it's really hard to short breakdowns. Every time it seems like we're trying to break down and get to a death level, we start a rumor that starts a big short squeeze. And that's what happened on Monday. On Monday, it looked like we were starting to break out of this bear flag channel that we've been in. And we started really breaking through some key levels that told us that, this could be something that takes us back down to the low of August. And right on command, it always seems like these things are almost timed. Everybody gets caught leaning one way, and then boom. It's a very rumor-driven market, and so we got a rumor of, the Chinese buying up some Italian debt. And that started basically, a very strong short squeeze. And it continued nonstop. The programs came in, and there were buyers at, pretty much every turn. And so that was pretty important. So what the market has been telling us really is that, we're in a bottoming process here. Bottoms are never, a one-time event. There tend to be a process that happens with a lot of jumps and a lot of fades and a lot of jumps. And what we're seeing is that even when things get really, really tight and the news cycle gets really, really nasty, we still find a way to come off these lows and bounce. And so, that gives me a little bit of hope that maybe we've seen potentially the worst of it, and that we're going to just spend the rest of the year in some type of range. I have a hard time believing that we would get back to here, but we don't really know. And so the market itself, though, besides a rumor that started on, Monday, we had a lot of things that I liked about it in terms of bounce attempts. If you look in terms of the intraday charts, this market had maybe the least amount of whipsaws that we've seen, of all the bounce attempts that we've had, of recent. If you're looking at, like, say, a 30-minute chart and you go back a little bit of ways, every time that we've had bounces, we've had some crazy times where, we jump and then we fade and we jump and then we fade and jump and fade, and the intraday action has always been really choppy. That made it really, a little bit crazy, to trade. And this one, we pretty much, except for a couple instances, it was a pretty heavy, pretty steady, uptrend. And, it caught a lot of people on surprise. You could really see that traders were starting to pile in, and also you can see the depth of this and the velocity of this was, pretty significant. And so, for a bounce attempt, I really think that this would be something that is, a good bounce. One of the things that, we do got to be careful of, though, is that, the range play is still in play. And so even though we had a very bullish week, it doesn't really change anything about the market, right? Because we've seen this before, where we get really giddy and we get to the top of the range and we fail. And so this range play is still going to be the go-to play till we break out of it in one usually very significant events. As you can see in 2011, we had been in a nice trading range for the whole time. And, every time that people thought we were going to break out of this 1350 zone, we never could, because it really takes something that's significant to move out of a range. It takes some type of economic news or, political news to shake someone out of, a range that you've been in. And it's going to be pretty much the similar for this, I would anticipate. And so now that we're getting to the top of the range, it becomes very pivotal, because really to thrust through this, we're going to need something, like some type of catalyst, whether it's, a Federal Reserve catalyst or a European catalyst. it's going to be something that takes us out of that range. And so that's one of the keys that you're going to have to be watching for this week, because, you know, we had a potential break of the bear flag, which didn't happen. And so the range held. And so now that range has just become, you know, even more validated. But one of the things I think is real positive about this market that I saw was that, you know, we did get a nice break in the Qs. You know, the Qs, this level here in the NASDAQ was very significant, as we tested it quite a few times before we had this very significant breakdown. And after the breakdown, we retested that breakdown spot, and then we failed right off of it. And so this time, as we made some higher lows, we actually came right back to that pivotal level, and we spiked it. And so that's really important to keep an eye on, because the NASDAQ is going to, you know, obviously NASDAQ and Russell is something you want to lead the way. And if you look at the individual action of stocks, you know, you see Apple here is at all-time highs, and if you see Amazon, you know, this is really what you want to see, right? A leader of the stock market breaking out to, you know, multi-year highs. You know, that's a pretty significant thing for the NASDAQ, and so, and overall pretty positive for the market. You know, one of the other things that you'll notice is that, you know, I noticed particularly for last week was that, you know, the news cycle in Europe has turned a little bit slightly bullish, you know, with that China news coming out. And overall, there were some policy actions and things of the Europeans adding liquidity to the system. I personally, you know, I can't read that stuff. I don't really know what it means. You know, I'm not educated enough in terms of economics, but, you know, I know how to read PRs, right? And so when the news cycle starts turning a little bit bullish, that makes it a lot easier in terms of the market. And so, you know, one of the things that, you know, we like to watch, that'll be the tell for us, is, you know, what's happening in Germany, because Germany's had a 14 or 24% fall from its highs in the last couple months. And so, you know, overall we had a pretty fantastic week. You know, in term for them, they bounced, I don't know what this is, 5-6%, just like the U.S. And so they're trudging up against resistance too. And so that's going to be something that you really want to watch, is, you know, what's happening with these European ETFs. You know, what's happening with the stock markets there, because that's going to be a tell for what's going to happen here, because they're one of the reasons that's brought us down. And so keep an eye on those. You know, the ones I follow are UWI, which is the Italian one, and then EWJ, which is not either, EWG, which is the German one, and then what's it called? EWQ, which is France. And so these, you know, France and Germany are the two big movers of the European economy. So, you know, you got to keep an eye on those and see exactly, you know, what's happening. You know, one of the things I thought was pretty bullish for our markets on Friday was that even though there was some news out for downgrades on some big French banks and the French market was tumbling, you know, we still had an underlying strength. If you look here in terms of, you know, what's been happening in terms of our markets, the dips have been getting bought, you know, rather aggressively, and that's going to be a big tell, because that shows you that there's buyers in there and that the programs are really coming in every time that we have a dip and it gets bought. And you can see what's been happening is the market's, you know, every time, even in terms of the morning when the market dips down, you start seeing rallies off those dips. And so what happens a lot of times, you know, the market gaps down or starts weak and people start shorting, and then you just get this epic reversal. And it happened multiple days last week after the short squeeze on Monday. You know, Tuesday had a dip in the morning, got bought aggressively. Wednesday, dip in the morning, got bought very aggressively. And then we had a fade at the end. But then once again, the dip on Thursday, boom, we dip and then gets bought aggressively. And so that's what you want to see when you're looking at, you know, for tells in the markets. You know, what's happening to their dips? Is there follow through in the market or is there not? And that was a big tell for, at least for me and what I do, because That's what I want to see, and that gives you more faith in terms of going long. And so, just keep an eye on those type of things. That's going to be pretty huge. Now, one of the movers that's going to be happening this particular week is that we also have a big Fed meeting, and right now the prevailing thought of almost everybody's, they didn't do anything last time, is that the Fed at some point is going to add some bullets into the system with possibly not a QE3, because it looks like there's not the political will to do that, but that they're going to be doing something. And so, a lot of this is going to be based on that, whether they're going to be adding money into the system via, they could still do a handful of things in terms of buying longer version bonds and things of that nature. But that's going to be a big tell, because, the markets can really run on this type of stuff. And right now what's happening is, bad news is getting bought, and then good news is getting bought. And that's the best type of market to be in. So, any additional measures, whether it happens or not, will be viewed as a plus, at least short term, right? Because when you're adding liquidity to the market, at least during those times when liquidity is happening, you get that short term boost. In terms of, one of the things I thought, I was thinking in terms of why this market still might push higher is, even my performance last week was really choppy. For a lot of you guys that have been with me for a while, you know that when there's usually a 4 or 5 day bull run, I can go on those runs where, we might hit 10, 15 trades that just skyrocket it. And, I was kicking myself all weekend because I was feeling like I was still really choppy, and I just wasn't getting the oomph in a lot of my trades in terms of the annexation of Puerto Rico type breakouts. And, I'm guessing a lot of people, just talking to other traders, a lot of people still felt missed out, even though the market was up so big. A lot of people I talked to felt like, their performance was not matching what the market was doing. And if the rest of the indices can follow the NASDAQ, I wouldn't be surprised to see a huge type of chase scenario happen where everybody piles in to really kind of eke out that performance. Because, I know with myself, I was feeling shitty all weekend, thinking, man, I should have made more money. Because you only get a few instances, during the year where you can get, big runs, where you move 5% in a short amount of time, right? It happens only every few weeks or, every month or so. And so, you really got to capitalize on that. And so that was one of the things I was thinking about, in terms of maybe this market can still go higher. But you know what? In the end, we're still not in bull mode. Three times we've had this level of a bounce. This is the third time. And we failed 2 other times. And so we don't know yet if this is going to be like the other 2 times. You can see here, we even kind of tested the area and tried to break out, and it just didn't happen. And so right now we're going to be seeing, really what this market's been made of. Now, in terms of some of the red flags I saw was, when I'm looking at the market, usually historically the last 2 since 2008, when the market bounces big, you see big runs in oil. And we didn't see that. Oil's up less than 1%. And there's really just nothing overall positive about this, right? It looks almost like a bear flag here. And so that was a tell that maybe, maybe something's a little bit amiss, because, you want to see commodities run with the market, especially with the fact that, we might be having some type of QE3 or some type of liquidity. To not see commodities run is a little bit odd. If you're looking at, say, the XLE, which is just a energy sector ETF in terms of the companies, you can see a very similar type of pattern. There was, we had a run, but it wasn't epic, right? And it didn't lead the market. And so, that's something that, I got in the back of my mind on, we didn't even get any higher than we were the last couple spikes. And so that's something in the back of my mind to keep an eye on. And then the other thing was, if you see here, everybody's talking about, China buying up this debt and China's doing all this. And it's like, we don't really see anything from the Chinese market this past week. They popped right into their 20 DMA, and and on a very low volume, up almost 2%, almost 2% for the week, but really trailing the U.S. markets, and so was emerging markets. And historically, the past couple years, right, emerging markets have really led the U.S. markets, and they provide oomph in terms of global growth and things like that. And so to not see those lead with energy is a different scenario than what we've seen in the past. And so that's a little divergence that you'll have to keep an eye on, because very rarely do you see big pops in the market without energy running. One of the things, though, even though the news cycle's been good, though, is remember the politics in this country and Europe can change on a dime. So, even though the news cycle's good, that can change very quickly. The political leaders in Germany and France, the two big boys, I mean, they're all on the hot seat. If you look at the news, even like the prime minister of Germany, her political party is starting to lose election seats across the board. And so one of the things that happens during these type of times is, populism really takes over, where the people say, enough of helping everybody else, what about us? Because they don't see the big picture that, we're all interrelated. Yes, Saeed, I do need 2 monitors, but I can't trade with 2 monitors. I got the ADD. I use one. So, keep an ey on that. If you see the political will start changing, and you see some of these people that have been supportive of the EU really starting to get their heads knocked off, that could be a tell, too, because whoever they put in place to replace these people will be, yes, Saeed, I know the script because I put it there so everybody else can see it. Whoever they put in place will be not so friendly to the markets. Other red flag, the data still sucks. It's continuing to suck. It's not decelerating yet. Big pace. We're just muddling through. And so, I don't know how to read that. That might mean if the Fed acts, then it doesn't really matter. But if they don't act, then, we just kind of get slowly pucked into this muddling around economy. So just, keep away with that. In terms of you guys, one of the things that you really need to do, because I see this a lot in terms of the chat room, is, really stop focusing away from, what the market should do or what it needs to do. These type of biases, they really kind of screw up your trading. I know, especially in our chat room, we have very opinionated people that are bulls and bears. And, everybody's always posting really valid information that's, thoughtful and evidential. And then, what happens is, we get sucked into those biases, and then we miss these type of big moves. Even on myself, I found myself constantly looking at charts on Thursday and Friday on TZA and FAS in it. And when you're looking at, the S&P, I mean, there was really no instances of breakdowns where I should be looking for inverse ETFs, right? What I should have been looking for is how to catch these dips and how to catch these bounces. I should have been looking at TNA and playing the bounces in these bad boys, not already preempting a downside move. And so, really keep an eye out on that. It's very easy to get sucked into kind of what's happening and what's happening with so many people in one room. So just be cognizant of that type of stuff. Now, in terms of my own watch list, boom, 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 boom. I'll just show you what we have for the daily tomorrow, and then some of these will be in play all week, and then we'll go over how to play these bad boys. So you can see here, SEMO is one that's a big Momo mover, right? Up 25% last week. It's at a breakout level. Nice move. So this type of stock, you're going to be able to play this in a couple ways, right? Number one, if we start getting dips in this stock, we might have potential bounce plays. If we get another thrust up, though, this is a type of stock that can really play a good short. When I play parabolic shorts, one of the things that I'm always looking for is, stocks that are, completely breaking out of the upper Bollinger Band. And so if we get another gap up on this bad boy and a pop in the morning, that could set us up for, you know, a pretty good short trade, at least on the day trade side. I wouldn't swing it because it's a very bullish stock. And so typically what I'm going to be doing like this is, you know, I'll use the daily chart to kind of confirm what I want to do. So I see one more thrust up. We'll have the candle completely out of the band. And the next thing you know, next thing I do is, you know, I'm using intraday charts to start timing these type of reversals. And so then what you end up doing, what I would personally end up doing is, you know, I would take something like a 3-day 5-minute chart, right? And I would start looking for potential areas of breakdowns. Where are we here? Oh yeah, 1350. And so, you know, just keep an eye on that. Thrust through, and we take out these highs. As soon as it starts fading on a smaller time frame, that's where you really start nailing in these shorts. So that's what we call aligning things on multiple time frames. You know, we never just start shorting or buying just based on what's happening on a daily chart. You know, we use daily charts as our idea finders. This is what we use to get our ideas on what we want to play, but we use a smaller time frame to time our entries. And so, you know, I always use a 3-day 5-minute chart, and a lot of people use, you know, 1-minute charts and 2-minute charts and things like that. And one of the things that you'll find though is the people that trade on 1-minute charts are usually just scalpers that are maybe putting a little bit too much money into things, because you'll get a lot of fake signals on a 1-minute chart, and unless you're really moving around big bucks, you're just not going to be able to get, you know, enough play, because you'll get fake signals all over the place because it's only 1 minute. You know, on a 1-minute chart, a few buyers can totally change the look of a chart, and so you got to be real careful when you play those. And so I'm a little bit hyperactive, so I need to make sure that I don't fake myself out with too many ideas. So I use, you know, 5-minute charts to smooth things out a little bit. You know, CGA, this was when I was kind of kicking myself on Friday for missing this 550 breakout. But you can see here we're starting to enter some key levels. You know, this 6 level, you know, where it's breaking out from. And it looks like, you know, it's making a straight run to the 200-day moving average. So a couple ways, you know, I'd probably play something like this is, you know, number one, it's got to rest a little bit. So, you know what, if it pulls back to, you know, possibly this 550 area, you know, that and it kind of goes sideways and bases a little bit, that should give us enough for us to kind of get us back to the 650 area. This is a real bullish move because it came off, number one, it came off earnings, and it came off of a base. And what you'll find on stocks that beat earnings and show growth is they can tend to run for months, right? They're trend changers, earnings are. And so this stock will be in play for a long time. You can see it's only had one opportunity to dip, and it got heavily bought. And so, you know, we'll be looking for a dip on this thing. And who knows? You know what? If it opens up weak tomorrow and it goes red to green and kind of takes out this high, you know, this thing could pop another 50 cents in a hot second. And that's a 16% move here. And so this thing, you know, this thing is already in very big beast mode here. You know, it's holding its moving average. All the bounces are working. So just keep an eye on this bad boy. So one of the things I'll be looking for is, right, you know, if we see a slight dip and then boom, we start taking out some of these levels, then, you know, that's our buy signal. And so just keep an eye out on that. Let's see, 1 minute. We need 5 minutes. Boom, boom, boom. But, you know, overall, very nice look. NTSP, this one's a little bit thin, so you got to be careful. Sometimes sometimes the volume spikes, and sometimes it just trades a few 100,000 shares. But you know, we got a nice level here. You know, we've been basing at this 6 level for a while, and now we're starting to kind of pop through. So we attempted to tap that 50-day moving average on Friday, and then we failed. So my play on this thing would be, if we can thrust back over this thing, that could set us a run, because if we thrust back over this thing, then our next level of resistance is kind of, we're right there. But, a thrust over that should clear that. And if that happens, we start filling this gap all the way to above 7. And, that could be a nice run. These type of things, now that the market's gone for 5 days, a lot of these lower float type plays will come in action. I was curious about this one. I didn't know if it was a pump job or not, because there's 1 million shares on this. So actually, Adam from our chat room had sent this to me, and I like the look on this thing too. Big volume on Friday. We tapped right into the 50. You don't always break these moving averages on the first tap. But what I like about this is that, number one, we've got a price resistance zone here, and then number two, we've got a second level of resistance at the 50-day moving average. The best breakouts are, often if you can break multiple levels of resistance, that can give it a double pop. And we had a big amount of volume here on Friday, so who knows if that volume can sustain. This could be a mover. So take a look, and this would be, we're at like 505 or 506, something like that. XTXI, I didn't like this one. At first I had it because I thought it was breaking out. Then I realized the stock is pretty extended. One of the things that you want to make sure when you're buying breakouts is, look for stocks that are coming off a base, because that gives you a good spot to put your stop. This makes it a lot more tricky. It might be worth a scalp. If we dip slightly and we take it out and break highs, you might get a 50-cent day trade out of it, maybe a little bit more, but it's not a very sustainable breakout. And if anything, on a big pop, you might want to be short biased. Reddit. So actually, I really like this one. I don't know what that means, Saeed. Reddit, I really like this one. Typically, when the market runs, these type of turds will start following Reddits, the SIFIs, these type of stocks, and they can go on big runs. Well, you can see here in August, we made a high. I believe it was about maybe 1955, I believe, was the look. So we're kind of crossing over that area. So this 50-day moving average will be the first pop, and if you can clear, the high from August, now we're starting to really now we can start really getting a move here, and then we'll have a real easy place to put our stop, which would be right under the 50-day moving average. And historically, this stock can go on big runs, and it's coiled up pretty tightly here. It's been bottoming out for a while, so I really like the look of this bad boy. So this would probably, out of the small caps, this is definitely one of my favorite setups. I like these type of coil moves, especially when you're getting a break over price resistance plus moving averages. Sim. So we had a big thrust here a few days ago, and then we've been just flagging for the last 2 days. One of the things you can notice, you can see by these hammers, is that the stock starts dipping, and that dip gets bought up pretty high into the close. And so there's definitely a lot of buyers that are interested in this stock, and not many people that are really selling it for that long. And so, another day or two like this, we could have a nice flag form that could break out pretty nicely here. So just, keep an eye on this bad boy. It might not be on Monday, might not be on Tuesday, but, if you can get even 3-4 days of a flag, finally this thing breaks, you've got a nice run. You don't have really any resistance till, above 650, 660, 675. So it could give us a very nice day trade. Glue, I've been watching this one for a while. The upside's a little bit limited because we got the 200-day moving average on it. But the range in this stock has been really nice for a while. And so we could definitely get a good day trade out of it. Because you got the 200-day moving average at like 375, 378. So if we can take out this range, you take out this range around 350, this thing can move. And one of the things about, a stock like this is, a lot of traders, a lot of chat rooms, a lot of blogs, right? This is a third stock that's just basically a day trading stock. A lot of people watch this stock. And so when it gets ready to run, people will pile in this thing and really really lift that bad boy up. And so, I wouldn't be surprised to see this thing, make a good move sometime this week. I got Tudo on my watch list. It might need to rest for a couple days. This stock is kind of like Youku. It's like another stock just like Youku in China. It's a newer IPO. It trades pretty wild here with some big ranges. But, one of my favorite plays that I personally do is, IPO breakouts when they break out of all-time highs. And, maybe it hasn't had enough time yet to really, form anything for a big breakout. But it can hop $2. I think the high is like $27.50. It can hop a couple bucks and get to this level in a hot flash. You can see here it's already gone $6. So, ideally maybe it rests for a couple days and then takes it out. But when these things go, they can really go. And you know what? It's been around for about a month and a half or so, and so it could take out. These things, when they go, they really go. You can see, one of our best trades for the year, I believe Z-Man called this in the chat room, was TAOM. This thing thrust on its first aim, then just went sideways. Tapped the breakout spot a couple times. When it finally broke, it really went. I mean, it went from, when we bought this thing at $11, it went to $18 in a matter of, less than 1 week. And so, maybe this one does the same thing, maybe not, but both Chinese companies, both IPOs, who knows, right? It's got a chance. Kirk, this is a former one that, we used to play quite a bit. So we got a 50-day moving average above us. We got a $10 break right here on price resistance. If we get a little volume and a break over 10, this thing could be a popper. Retail has been hot. A lot of retail stocks were really making a move last week. And so expect some of the turds to get bought up if retail is still hot. So I definitely like this one on a break over 10. No, I like this one. I ganked this one off the Z-Man's blog. I forgot how he drew his line, but we play this stock quite a bit. So this stock needs probably, let me get to a smaller time frame and nail the exact entry. It looks like about 835 is going to be the level to really kind of get this bad boy moving. If that happens, it could pop right to, 884, 890, something like that. So keep an eye on this one. It looks like about 839 should cut this thing. So good look. This stock can move quick. 839 gets us to 890 in a hot flash. So I like this bad boy. And you can see even on the weekly and the daily, this thing is coiling up here for a run. And it's due. DY, I took this one off the Z-Man's blog too. This one, right, there are not that many good 52-week high breakouts, so we're almost there on this bad boy. So it looks like about 1880. 1880 is the mark. But you could see on the 1 hour chart, basically from August 31st, it's really coiling into, a nice little flag pattern here. That's what really caught my eye on this bad boy. If you look at the 30-minute chart and the 1 hour chart, this is the type of pattern. This on the daily is a little bit messy for my taste, but Right, we're really coiling up here on the 1 hour chart and the 30-minute chart. So this is a pattern that I really like. This is one of our favorites. So we got this big move and we're flagging. I don't know, Saeed, what type of pattern would this be called? Something type of triangle. It could be a desymmetrical, asymmetrical, Puerto Rican triangle. Who knows? I'm not big on names of patterns, but I know when they look good. So this one's going to be a go-getter. So I wouldn't trade this off the daily, right? Keep the 30-minute chart up, keep the 1 hour chart up, and then use the 5-minute to really time this bad boy and nail it. That's a sweet look. Ascending triangle. Thank you, Saeed. DPZ, this one we were watching in the chat room on Friday, nonstop. We were wondering when this thing's going to break. It looks like, this thing is almost ready to go. We're tapping this area a few different times. One of the things that you guys have noticed about resistance is, right, the stock market is basically just all supply and demand, right, of shares. It's an auction market. And at certain levels, there's an excess amount of supply of shares that are being offered at a certain level. And the more times you test that level, you're sucking up all the supply that's there. And so the more times you test it, the more powerful, the breakout can be. And so this one is not as clean, actually. You can see here on the daily, DY looked really nasty. And then you can see on shorter time frames, DPZ is a little bit more wild than DY is. But it looks like the go-to, that go-to spot is right, 28.50 should get it going. And a nice weekly chart, everything looks good, right? It's aligning on all time frames here. This 10-minute chart, very coiled up, and it's already started to make its move. Ideally, we might have just nailed it in that area, but can't nail them all at the right time. It's still got a chance. It's already started to break out a little bit, but 28.50 should get it going. Now, when you're buying breakouts, the one thing that you want to do, right, is how we don't buy breakouts on daily charts when they're extended. The reason, a lot of people will tell me, they say, Kunal, it's like I buy these breakouts and a lot of them just fail right away. And one of the reasons they fail right away is that if a breakout's too extended on the daily, right, we never buy it. But if it's all coiled up on the daily, you're thinking, wow, if it takes out to new highs, it's going to go. But the key is you want to align on multiple time frames. So if it's too extended on a 5-minute chart or a 10-minute chart, right, and you're chasing it, it's no different than it being extended on the daily chart. And so oftentimes if you see a big spike here on the 5-minute or the 10-minute on a smaller time frame, but it's breaking out on the daily, there's a shot that it could fail, or you have to give it a longer leash because you're buying it into a spike, even though it's not a spike that you can see on the daily chart. It's in a spike. And so that's one of the things that you really have to be careful of, is buying the breakouts into the spike, because obviously anything that goes straight up or anything that goes parabolic in anything, right, is going to come back down and retest. And it's going to come back down hard. And so oftentimes you buy that breakout, you say, shit, man, as soon as I bought it, it spiked down 30 cents. It's like, well, yes, on a shorter time frame, it was extended, right? You never want to buy stocks that are too far away from its base. And that's how you can really time these breakouts and get a good price on them. Sig, I got this one on watch. This one's going to be a little bit more tricky. But what I do like is it's got a nice bottom base here. Right? We tested the 20-day moving average on Friday. It didn't go. But there was a decent volume spike here. A little bit more significant than it's had in quite some time. And so that gets my interest here. So if we see still that type of volume interest on Monday, which would be tomorrow, and we can get a clean break over this 20-day moving average, that gets that gets me pumped. And so that's a stock that I end up wanting to play. You can see here once again it might. We gotta watch it. We gotta watch it tomorrow. The reason it might have failed at that 20-day on Friday was, it had a late day. It had a little bit of a late day spike here, but it was just a little bit too extended to really break through a major moving average without rest, right? Because up until 3 p.m. it was at 478, and then it's like, you get a spike, back spike. So this thing already ran, what's 40 cents? This is 45 cents on a $5 stock. It's almost already, it spiked already almost 10%, right? And so it's hard to buy a break of a 20-day moving average when you're chasing a spike intraday, right? And so ideally we want to see a break of this 20-day moving average, but we want to see a nice intraday chart where it's not just spiking up, because that's how you buy a breakout that tends to fail. And so when people say, man, I'm buying all the wrong breakouts, it's usually because you chase a spike like this into the breakout. So don't do that. GNK. Bum, 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 bum. So this is one of my favorite types of plays that you guys will see. This is what I call, this is my favorite type of pullback play. This is my favorite type of pullback play. What you'll see with big Momo stocks, they'll tend to run, and it got flattened out big time at its 200-day moving average. That's to be expected. The 200-day moving average signifies the long-term trend of a stock, right? So it's the most major of the moving averages. And so, to break it on the first try is a little bit ludicrous, right? Especially coming off when it was just $4 a month ago, right? Now that it almost tapped 10, it's had 3 solid days of pullback. And one of my favorite go-to moves on pullbacks, I find, is usually a 3 red candle, 3-day pullback. There's usually some type of bounce, dead cat bounce, some type of bounce. And I don't just buy it on random, though. What we want to see, right, is some green. We need to see a potential reversal. So some type of green candle here. And then what we do is we time it, on a smaller time frame to really nail the entry. So let's see here. So something like this. So if we start, if we get a green candle, the first thing that I'll be looking for is for a sign of reversal is it takes out this base that it was building on Friday, right? So that would be one potential trigger for a day trade. So you say, well, okay, this stock's bottomed. We take out this level. Now we've got a thrust where we don't really see any level of resistance for a little bit of time, and so that can be our signal that, hey, this thing might start going. And then what you just want to keep, just keep a real close eye on is just make sure there's nothing funky coming in the way on, any of the different charts that we'd be looking at. So you can see on the 30-minute chart, there's no real level of resistance till. That's also true. There's 2 ways to play. That's the second way to play it. So there's no level of resistance here to maybe 830, something like that. So just keep an eye on this chart here. So I'm thinking 794 might be a trigger. The second way that you can do it, that I like to play would be a bounce off the 20-day moving average. A lot of people play EMAs, but I'm not an EMA type of guy. I prefer SMAs. So if we can hit the 7 mark, that might be a good bounce point for me. There's a lot of price support around in this area, and then we get a 20-day bounce. Usually, in a Momo stock, that first bounce off the 20-day usually gets bought. Historically. And you can see it from, a whole handful of stocks. Right? JVA, first bounce off the 20, bounces $6. Mako, big run. After the big run, the first bounce off the 20, you typically get a good bounce. And this fits multiple things, right? The 3-day pullback rule and the bounce off the 20. So I like bounces up to 20, so keep that in mind for GNK. Actually, that might be that's my favorite bounce play for the moment. Grow. Huge run. We've been pulling back for quite some time here. So we've got a couple things here. This 140 to this 200-day moving average, this could be a good bounce point. It's also setting up in another kind of wedgy kind of thing here, where if we can kind of get out of this little, it's hard to draw on TC 2007. Let me get it on this bad boy. Oh shoot, wrong stock. Sorry. Boom, 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 bam. All right, let's get this bad boy. All right, we got. And we got right here. So we can kind of come out of this. If we can kind of come out of this, and I stink at drawing these lines. Most of the time, a lot of good chartists know how to draw them. For me, I just kind of go and feel a lot of the time. But this one looks good. So I don't know the name of this. This could be also a descending triangle thing. Who knows? But it's a good chart pattern. So we thrust out of this bad boy. You could see a very nice pop. It's hard to measure the exact level of resistance. It's called a wedge. Thank you, Saeed. It's hard to know exactly where it could go, but if we're looking at, say, the 10-day chart, we don't really have any significant levels of resistance till 175, 180. I mean, possibly, you can go 184. One of the things that you'll notice, though, on this type of move is that this stock, it can run hard very fast. And so when you see the move happen, you can put it, no matter what target you use, it's probably going to overshoot it by a little bit. But I would not be surprised to see this thing in that 180 zone, 185 zone, if it can break out of this. But that thing looks hot. That's all I can tell you. So grow. Keep this bad boy on your list. Gawk. So this one's a little bit more tricky. Not a regular setup that I post in the chat room a lot, but it is something I do play. This is what you call kind of like a pincher type of play. You get a stock that's just been tanking for a long time. We get one big update with some volume. Typically, this type of thing can run for multiple days. You see here, it ran for 3 days, ran for 3 days, ran for 2 days. It typically never just goes for 1 day. And so I got this on squeeze watch for Monday. So you can see here, we had a huge, nice reversal here. So my thinking was, if we can take out kind of this spot right here, right? This thing can make a little go-go. So you can see here, pretty much on all time frames, we take out this 325. Yeah, something like that. 325, 324. We got a bounce. And so this aligns on all time frames. We'd be breaking out here, breaking out here, breaking out here. So it could give us a good day trade with a potential target of, this thing could really move. You don't really see any level of resistance till 392. 384, 392. So that I like. Boom, boom. So that's it for my watch list for tomorrow. I know we got a whole host of questions here that we can go into. If anybody's got some other ones, hold on one sec. Z-Man wants to know about ITMN. ITMN. All right. So ITMN is actually not really a long setup. It goes the other way. So this is essentially what we call a bear flag. This is a typical bear flag. Most people use bear flags via price. You can see right here, dun dun dun, dun dun dun. So we got a bear flag right there. And so how I play this bad boy, is really a break of, right? Once we start breaking this line, that's when you want to short it. Now, if the market starts tanking, right, we can preempt this thing a little bit and see what happens. So it looks like, let me see here. Let me zoom in a little bit. 2055, 2050, something like that should get us the right spot. So that's the big part of timing, right? When you're timing these things, right, you can't just go off this and say, hey man, I need to short this thing, right? You need to be looking at pretty much all these time frames and really pin down the exact spot, because that's how you get shaken out, is when you don't actually have your levels correct. And most people don't have their levels correct because they're not zooming in or zooming out, in the right way. And so, right, 1 hour, 30 minute, 5 minute, 10 minute, keep all these bad boys up. This is going to help you really time these things. By the way, this program is called TC2000. It is only, both these programs are from Telechart. They only cost $29.99 for all of it, so it's pretty cheap in case anybody needs a good, scanning type of thing. That also you can set alerts on. I prefer TC2007s. It's faster and it's got cool scans I can write. But that's an old school, and I think it's like 5 years old. Because I've been using the TC2007's this. I like it because it's a desktop platform. It's real old school. It's like, dot matrix type stuff, but it's so fast, and I can make watch lists for like anything. I can search for anything on this thing. It's like if I want to do, if I'm looking, I say, I want EXK is running, and I need another silver stock. I just say, okay, change watch list to sub-industry components, and then bam, on the left side, I got all the silver stocks that show up, and then I can just, start flipping around. Boom, 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 boom. Right? I find my laggard play, make sure the chart is good, and it's game time. And so, I really like this for helping me get organized and things like that. Usually during the day, I do it off memory, but at night, when I'm looking around, I'll use this. Bum, 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 bum. All right. That's a good question, Derek. Derek's question is, please go over what you look for in an intraday break. For example, say a stock gaps up, runs, then pulls back in bases. Do you try and play for the break of the base or the break of intraday highs lately? And I seem to get faked out more often than not. So that's true. So when you're looking at an intraday breakout, there's two ways to really, there's two trains of thought, that we tend to look at. And, oh shoot, let me move this thing back. Go into there's two thoughts when you play breakouts. One, and there's two, and I actually play them both ways depending on kind of, what I'm feeling at the moment. One thought on playing intraday breakouts, and you'll see that a lot, is that you buy the actual break of highs. And that's your intraday breakout. And the advantage of doing that is when you buy a break of highs, right, you're getting confirmation via price that it's broken out, right? But the disadvantage is that, 50% of breakouts fail. Throughout history of time, 50% of breakouts always fail. The beauty of breakouts usually is that when you nail one, you could get a big gain versus, if you sell it, you might lose 10, 15 cents. And so the train of thought on, buying breakouts is that you're getting confirmation. The other way that I like to buy intraday breakouts, and I don't have anything off memory right now and exactly a stock I can show you except TSPT. But if you look at my trade videos, I got 100 of them. The other train of thought is that you can buy in a base. And stocks usually when they gap up like this, they'll spike up in the first few minutes and pull back and then they base. And the base can be considered basically like a flag, right? A flag pattern. And one of the ways that you can play a flag pattern that we do often is that you buy actually within the flag with a stop under support. And so you can do that. And so like this stock was, basing right here. And so I think when the Z-Man called it, he bought it at about 606. And so what you can do here is as it's flagging, you buy this stock. And the reason there's positives and negatives of that. When you buy inside the flag, you're making the assumption that the stock is going to break out, as that's what the trend is doing. The trade-off is that you don't have confirmation via price that it has broken out, right? So you're making an assumption. And what you're also doing is you're adding a little bit of risk because you're putting your stop under the flag. So you've given yourself a little bit of risk. The advantage of buying within the flag is that you're getting a better price. And in return for getting a better price, you're giving up a little bit of risk, right? Because, you've got to place a stop under the flag. But the key part of it is, especially if there's volume, is that flags tend to break in the direction of the trend. And historically, and I don't know what the probabilities are, but from what I know, 3 out of 4 times, let's say. And so you can make the assumption that if it's flagging, it's going to break in the direction of the trend of that day, right? This is an intraday breakout, so we're only looking for the trend of that day. And so you're making an assumption that it's going to break, and you're giving yourself a little bit of risk. Where if you just buy the actual break of highs, you're getting price confirmation, but you're giving up a little bit of price here, right? 30, 40 cents or whatever it might be from the base. And the other part is, usually when you're chasing in, everybody's chasing the intraday breakout. So oftentimes, you get a spike and a little bit of a fade below, and then a spike and a fade. There'll be a little bit of choppiness sometimes right after the break of highs, especially on a 5-minute chart. So you get a little bit of shakeout. So you might actually have to use a little bit of a looser stop anyways. But you've got confirmation that it's a breakout. And that's what tends to happen, like, when we trade intraday, like TNA and TZA, one of the reasons that we tend to get shaken out a lot is that we're always trying to buy breaks. And that's where everybody else is buying. But the best spots usually, in my opinion, are buying within the bases because, you're adding a little bit of risk in terms of, you potentially don't have confirmation and you got to put a stop below the base, but you're getting a better price. You're not chasing it. And then you can let things develop. And so that's the two trade-offs. And the other part is, right, the risk is still relatively low. I mean, when you're buying within a base, and if you look at all my old trade videos, usually the bases, they coil tightly for, an hour, 2 hours, or whatever it might be. And the base is going to be pretty tight. It's not a 50-cent base. It's going to be a pretty tight base. And so, to put a stop under the base, you might risk 5 cents or 10 cents, maybe 6, 7 cents, whatever it might be. while you're making the assumption. But the good part is that you also don't have to babysit it, right? Because you're buying it, you set your stop, and now you're just letting it work itself out. Where when you buy breaks of highs, I mean, you're really watching every tick, right? Because you don't want to miss the break. So you're like sitting there going, okay, all day. Come on, is it going to go? Is it not going to go? And so you sit there really staring at it, and then you buy that break of the high, and psychologically it also freaks you out a little bit, right? Because you've been staring at the thing for 2 hours, and that's why a lot of people get shaken out of it. And so there's just trade-offs, right? You get price, less when you buy bases, you get a better price. You add a little bit of risk, but you don't have to babysit it enough. Where you buy a break of highs, you get confirmation, you don't get as good of a price, and you're definitely going to have to babysit it. But they can go both ways. They both tend to work. I don't know if one works better than the other. I personally like buying within the break, within the base and into the breakout, because it's just less work. And it's a very high probability trade too, right? It's still going to work a majority of the time. If the market doesn't go south, then it's gonna break in direction. It's gonna break out of the flag or the base in the direction of the trend. So you're just making an assumption. So I hope that answers your question, Derek. All right, John, can you talk about how you manage a trade after unit? So, like, what do you do? Support, resistance, MAs, price action, behavior. All right, so that's good. So when we're managing a trade, right, we're looking for a couple things. One of the things that you're looking for, and it depends on the type of trade, right? If you're doing a swing trade, you're managing your trade a lot different than if you're how you manage a day trade. So one of the things that you're looking for when it's a day trade is, you know, within a few minutes or in a short period of time, that trade should start working for you, right? Because if it's a day trade is a timing-based trade. And if it's a timing-based trade and you've entered it at the right spot, it should start working relatively soon. If it's not working or it's going down or it's just stuck, then there's a good shot that your analysis or my analysis was wrong and that I timed the entry wrong. It's just not ready. I mistimed it or I misread it. And so that's kind of on a day trade, you know, that's something that I'm looking for. On a swing trade, it's probably not going to work right away. On swing trades, you know, I'm looking for more buying off stocks off support and just putting a stop under. I'm not really looking at necessarily the intraday charts so much. I'm looking at daily charts to see, to judge, you know, where my support, where my resistance, you know, all those things are. And so then I'm managing more levels on a daily. So a lot of times it's, you know, set a stop, and whatever happens intraday doesn't really matter, because when you swing trade, right, say you bought this pullback on Amazon at like 208 and you just put a stop under these moving averages, so at 206, and then you're sitting there thinking, okay, well, my first target is usually going to be, you know, the last level of resistance, and so that's going to be around 222. So you buy a 210, you got your stop, you got your first target, so it's like a set it and forget it type of thing, and you want to let the power of support and resistance work itself out. What happens on a 5-minute time frame is not going to really matter, because there's going to be a ton of ups and downs, but as long as it holds above your stop, the trade is still valid. And then what I usually am doing, right, is as it tests the first level of resistance, that's my first target. So that's where I sell half. And then what you're doing, I sell half and then I put a stop at my buy price. And then so now the rest is on the house. It's a casino money, right? Because you've already made money in the first half and you're basically going to be even on the second half. And so then that's when you start going for the home run. And so usually what you can do, what I would personally do is I'd say, okay, well, I'll maybe my next target is, you know, the high after that. So, you know, you can sell into that thrust if you want, and you know, and then take your second profit. What a lot of people will do, though, is what they'll do instead of selling into that thrust, if it's a big level of resistance, what they'll do is they'll start monitoring it at this level, looking for failure, And if it doesn't fail, then they still hold that second half, right? Because it's casino money. You're playing on the lotto, and then you might actually get yourself into a nice breakout. Dun, 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 dun. Now, also in terms of day trades and things like that, one of the things that you kind of want to do also is, right, number one, it should start working for you. Number two, on day trades, right, you're really watching levels of intraday support, things of that nature, to make sure that support doesn't break. So like in terms of Amazon, what you could see on its breakout day was this 20 SMA was holding as this big support. And it doesn't always happen like that. It can be something else. Sometimes price rides up on different things. I find the 20 SMAs, typically if a stock is trending very well, will serve as good support. So since it's holding over this level of support, my red flag on really getting out of this would be if it starts breaking below that. Then that's my red flag. And maybe this breakout, I should take my profits. The other thing that you really want to be doing on these smaller time frames when you're day trading is, right, if you're buying within the base, if you're buying a stock within a base, then the one thing you don't want to do is let the stock go back below the base. That's a failed trade. And so always be careful, always watch those levels, right, on smaller time frames. And when it starts breaking down intraday or below your base, well, then that's a failed breakout, and that's probably something that you don't want to manage. In terms of small caps, one of the things that I'm always doing is, right, we're trying to get it within the base, and then, one of the things that we like to do is, always sell half on that first spike or sell 1/3 on that first spike, put a stop at the buy price, and then, let the trade work itself out. Because these stocks typically, especially small caps, when you get towards inflection points that are breakout points, they tend to spike. They tend to spike very fast at key levels. If you look at, they'll spike really fast at all key levels, and then they'll come back a little bit. And so one of the things that you want to do as you're looking at a stock like this that's breaking out a lot is sell some into the spike, put a stop at your buy price, and then see what happens on the rest of it, right? Because you get a lot of spike, fade, spike, fade, spike, fade, spike, fade, right? And so if you're playing these on breakouts, these intraday breakouts, and you can see certain Momo stocks will just have a ton of breakouts that you can buy, right? It's sell on spike, put a stop on under the buy price, and then see what happens, and just start scaling out as it spikes up, and just be wary of your levels, I guess, is one of the things that you, right? If you see a heavy resistance point, then you push, you want to get rid of some. I hope that answers your question. All right. Ricky, so Ricky wants to know, what methods do you use for setting exit prices? So one of the things I'm using to set exit prices is resistance points. Those are my target levels. And resistance points, you can find resistance points on different ways. The best way to find big time resistance points is on the daily chart. And so that can give you an idea of where a stock can potentially go. And for the most part, oh, damn it. How do you add something to this bad boy? Add toolbar. Regardless, so one of the things that you're doing, right, is when you're looking at targets is I'm looking for areas of supply. Where can a supply of shares come on a stock and slow it down? And so typically, the most obvious ones are moving averages, and you'll see a lot of it on stocks is they'll fade at major moving averages, right? We buy the breaks of them. We don't buy under them usually, right? And so one of the targets, at least long term, is if you're swing trading, is, using these moving averages as good target zones, because that's where the level of supply will come in and where people will sell it. In terms of, day trading, right, we'll use smaller time frames in terms of, look at those 30-minute charts, those 1-hour charts, right, and figure out levels of supply that can slow down the stock. And so that's really how I'm kind of picking my targets. A lot of it's going to be on feel, though, too, right? If a stock spikes up too far too fast, then it's probably not sustainable. Doesn't mean that the targets change long term, right? Because it's still probably going to run to its next level of resistance. But if a stock spikes up too far too fast, within the next 10, 15 minutes, at least on an intraday basis, it's going to pull back. And so if you're able to ride back those pullbacks and not kick yourself for giving up profits because you want to, get the bigger chunk of the move, then so be it. For me personally, because I'm a very feedback-oriented person, I like short-term results, or I just, I'm a me now type of person, right? So, if I see $500 profit in one of my stocks, and because it spiked up too fast, and I don't even take 1/3 off the table, then I'm going to be kicking myself if it comes all the way back and retests, and then it has to do this big thing where it just kind of comes back and forth. Like, see this stock like GKK, it's been breaking out all its levels and doing that, but see, it's also been pulling back really heavily, right? And even though the trend is up and it keeps breaking back out, and so, you would be right if you wanted to hold this into all this mess, I would still be kicking myself because I'd be like, oh man, it just dropped 50 cents. I just gave back $1,000, so on and so forth. So a lot of it's going to depend on like who you are as a trader too. Pay attention to as the day breaks. Oh, sure. So that's a good question. So in terms of what I'm paying attention to during the day, the main thing that I'll be paying attention to is my own personal watch list, because that's my watch list. I know the stocks. I've already studied them up. So, ideally that's what I want to be paying attention to. Now, there's going to be times where not anything on my watch list might be popping. It's like the luck of the draw. So then what I'm also doing is, right, I'm looking for multiple things that I always keep an eye on. Like, you'll see me post in the room a lot of times in the morning is stocks that have gapped up in the morning, right? A lot of those intraday breakout stocks that we play are never off my watch list. They're stocks that came up on a PR and the gap up, right? And so we get those intraday gap breakouts is we're looking for those stocks that gap up and then have big volume throughout the day, because we know that they'll spike in the morning and then go sideways and then break out. And so I'm always keeping an eye out on those. So, you can go on like, you can go on FinViz, or, I've got programs for it, to lessen my workload. But, if you just need something that's a free thing, you go on FinViz, maybe at like 10:30 and see what the top gainers of the day are, right? Those are probably the stocks that just gap up on news and things like that. If something's up 27%, 28%, in a hot flash in the morning, and, that's a gap up stock, right? And so that's something that you want to keep an eye on. And so I'll be looking for those two. In terms of, then adding things to my watch list, I'll be very cognizant of like what the Z-Man is saying, because, usually he's got a very good eye for stocks that are sitting up intraday. So if he's throwing out stocks in the chat room, I'm putting those on my watch list too, because he's very good. And so, sorry, I'm losing my voice a little bit. I talk too much. So I'll keep a list of those. I have friends on like Twitter and stuff like that. So, if they're pointing out a good stock and I look at the chart and say, yeah, that's not bad, I'll stick those on my watch list because, obviously I'm not going to be able to find every single stock in the world. I mean, I got this one computer and I'm running the business and I'm running the chat room and I got all this stuff going on one computer. I mean, I'm my watch list. Seems that lately failed breakouts become great short opportunities during this. Yes, Ricky, failed breakouts, that is a valid method that a lot of people do play. Failed breakouts can become good shorting opportunities. Let me see. I don't have a particular example, but like SEMO was like that. In a lot of ways, right? It took out its high and it took off, and then the breakout just stalled, and so the next thing you know, right, you just get this boop 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 boop. You get a little bit of a fade, and it'll happen a lot. It's my buddy Investors Live tends to play that type of setup a lot. So he'll have breakout lists, and then if it breaks out, he's long, and if it starts to fade, he just shorts it, and it's a valid strategy. A lot of people use it. Charles, when you set an alarm on the watches, how far ahead of your buy trigger do you set the alarm? Are the alarms set for price only, volume only, or both? Fantastic question. When I'm setting my alarms, I'm setting it usually if it's like a $5-6 stock, right? I'll usually set it for 10 to 15 cents before my my buy price, because the one thing that happens is that, if you set your alert for the minute of the breakout, well, by the time you get your alert and you pull up the chart, we're all already buying it and it's getting pushed, right? So you don't want to do that. You want to give yourself, it depends on how fast that you look at charts too, but you want to give yourself a 10, 15 cent cushion. So you like 1%, 1.5%, anything before that, and you're going to be getting a lot of alerts on a lot of stuff. You do 2, 3%, I mean, you're going to be getting all these alerts pulling up charts of stocks that are never going to break out, because, how often you put an alert 3% before the breakout spot? What are the odds that the stock travels that 3% and then goes even another 5-6% and just made this like 10% run in a matter of 10, 15 minutes? Probably not. And so, you want to get a little bit, you want to get a little bit of head start, but not too much. You don't want false signals, and you don't want to be chasing around looking at just too much stuff. So I hope that answers your question. I don't set the alerts for volume. The reason is, that's volume, moving averages, stochastics, all these things that we watch, those are not basis to buy anything. Indicators are used to confirm only. And so volume does not precede price. Never. It never does. It's an old wise tale that a lot of traders use, and it's not true, because volume is just an indicator, and indicators are used to confirm what price action tells you. And so now if the stock is breaking out, right, and it has a lack of volume, then maybe then the volume has not confirmed the breakout, but it's still breaking out, and so they're used to confirm. And one of the things that you'll find on small caps in a lot of stocks is that volume will often trail the price, because most traders are somewhat uneducated on trading. And so what they tend to do is, they're going to all pile in at very key levels, and they'll do it after the breakout. It's like, oh, it's broken out and it's up 18%. Now let's get in. So the volume will come in after the breakout often. And so you don't know for sure if you put your alerts with the volume criteria on it, you're going to miss a lot of breakouts. Now, you can scan, and this is a whole different thing, you can scan for stocks with a big explosion in volume and set alerts for that, because that might tell you that there's something going on in one of those stocks. And so that's all right, so that is it for the questions on that. Let me see. Check my email real quick. Dun, 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 dun. All right. Okay. Oh shit. Hold on. I just unbuttoned the question box or something. Oh, here it is. All right. Okay. So I'm just gonna start. A lot of you guys got questions in the answer box. Let me get to these bad boys. All right. So Kunal, Greece is rumored to default this weekend. This week, Bernanke speaking Thursday. Any chance of Q3 or is the market breaking down? Darren, it's hard to tell. I mean, we're not really in the guessing game. The only thing that you can do when there's so much news that's coming is, be aware of the landmines that are potentially out there, and then make sure that you have an idea of, where the market has added risk, where the market has not so much risk. What are the levels, where if we start crossing below them, it's like, hey, I should sell my longs and go short, things like that. So, the big thing is, keeping aware of what's happening, but letting the charts, do the work, and being aware of what's on the main charts as your key levels of, where are the red flags, where are the green flags, so on and so forth. All right. So, my boy he wants to know about HNSN. Fair enough. All right, so HNSN. All right, so this is a pretty cool stock, man. I'm not sure. It's doing something funny now, but this is typically going to happen, right? So this stock, right? It's coming off. It's coming off this bottom that it made right here, right? Where it muddled around, but it didn't break down. You get the huge bounce, right? And then now we flagged for a few days, and then it ran again, right? And it ran about 440. I totally biffed up this trade, by the way, because I didn't even sell it at 440. I think I still have it in one of my accounts. So now this is at a big move, right? This is a $2 move on a 260 stock. That's a big percentage move for the last for the last period of, this is like what, 1 month, less than 1 month. It's had a 50% move or something like that, right? So that's a big move. So now what it's doing is digesting, and it's doing it over support, and so that's good. So that's a slightly, it's a bullish pattern, but it doesn't necessarily mean anything yet. It's just digesting this move and resting above support, and sooner or later, though, it looks like it's gonna go again, and the key is just gonna be, timing, because this is not a clean pattern. When a lot of the flags we look at, right, we're looking, it's a lot cleaner. This has no easy way to play it, and so when you're doing it, right, you want to really align yourself on multiple time frames. And so now we're looking here, and we can see 30-minute chart, right? 1 hour chart, 5-minute chart, 10-minute chart. And so now, now we can start seeing some levels. So one thing you could see here is that this 426 area seems to be, a decent amount of resistance. And you can see here, these last 3 candles seem to be failing at 426. And so this 426 is a key level. And so why did this thing not break out on Friday? Well, one of the reasons was, right, too extended intraday, right? It came off a bottom, just spiked up real fast. You're not gonna break out when you're this extended, right? The best breakouts are gonna happen off basis. You try to buy a breakout when it's this extended, you're just gonna get a pullback because it's it's gone parabolic, right? Just like some biotech stock that goes up 200% in 2 weeks is parabolic. On an intraday basis, this is parabolic because it's straight up. And so, what we're looking for here is it's got to come back down and rest. At least it closed at 413, and it's got to base and then make a run to 426. And you can see here, though, I mean, if it happens, if it can do that, it potentially could run. If it breaks 426, then the old high is about 438. So, you'd get like a potential, right, 10, 15 cent scalp. The key is going to be, though, if you could take out the 430, then you don't really have any level of resistance, right, till now you're going to have to really go back a while, right? There's no level of resistance till 478, 480, right? So it's got a lot of airspace, as I like to call it. So that's pretty cool. So it's a bullish stock. It might have a little bit of work to do before it goes. On a swing basis, I mean, what you could potentially do, right, if you're just more of a swing type of trader is, look for tap backs on this 50-day moving average. If it holds, then just buy and put a stop under, and then just kind of let it work itself out, with a 436 target. All right. So when you're buying the breakout, how are you determining your stop out if it fails? Great question. So when you're buying breakouts, right? I mean, you're buying a break of a stock on, making sure you line up multiple time frames. So, one of the things that you're going to be doing is, obviously, if it breaks under your breakout on a daily time frame, right, that's a failed breakout. So how do you give it, enough room so that you don't get, a fake out necessarily? And so on a stock like say Amazon, right, you're trying to time it. So you see, okay, well, 227 is my level or whatever. And then what you're doing is you're going to use smaller time frames to really judge your stop, unless it's a swing, right? If it's a swing, then you're using your daily charts to determine your stop. And so you can use the nearest pivot, or you can use, depending on how long you want to hold this thing. Some stocks on large caps tend to break up for like 5, 6, 7 days. They just go slowly up and up and up. You could use a stop on the low of the day before, or you start really zooming in here on multiple time frames and try to nail an exact spot. And so there's, I guess, no easy one on this. So a lot of times what people do is they'll use, right, stocks making higher lows here, right? So this last dip here, you could see here, right, it pulled back to its old resistance, so a lot of traders would just say, okay, well, if this level fails, then that period of higher lows is over that it's been making here, right? Higher lows into its breakout. And so say, okay, well, if it breaks back below this level of support, this is my nearest level of support, failed breakout, if that makes any sense. The key is going to be to have good reward to risk ratio, because this is like a $6 stop, right? Which is not much. I mean, $6 stock, $200 stock is only 3%, but then you got to make sure that your target is at least going to be $12, right? Otherwise, it's not worth it for you. Now, if it's just, another type of breakout, another way you can do it is, right, depending on where the breakout is right, if it's breaking out and there's like any type of base, then you just set your stop under the base. And if you're buying, a break of highs, you at least will hope that the base is somewhat close, and you can set your stop under. Or, you say you give yourself, I'm going to give myself, one candle or something like that. And so I'm going to put it under whatever the last pivot point was. PCYC. So, Ricky, this kind of was a failed breakout on Friday, but it wasn't, right? Because the breakout didn't confirm. And it was but for that short setup that you were talking about, you're totally right. That would have been the perfect type of play, to short on the failed breakout. So like PCYC, it tried to break out, but right, it didn't really take out. It didn't really take out its resistance, right? And if you're looking at, right, smaller time frames here, right, this 12:15 seems to be the mark. So, the last couple times, we've tried to buy it. Like I tried to buy it a few days ago, right? And then I didn't nail it right. It needed to confirm, I think, a little bit more. And so this 12:15 mark seems to be the mark. So, yeah, it tried to break out, and then it just kind of failed because it just didn't get enough juice to get past its old resistance. And so, really keep cognizant of what's happening on these smaller time frames. And so when this thing finally breaks, it's this pattern that it needs to come out of. And so we're almost there. If we do break it, then you don't see any resistance till, right, this would be, I don't even know what it is, 1280. So that's nice. You got a little bit of juice left in that thing. Charles, great question. Do you ever trade currency ETFs? No. I'll tell you why. So, this is the chart for the US dollar, right? And so what you see on this thing is crazy. So it looks like on the chart this thing's all wild. You got gaps, you got all this stuff, and it's like, okay, it bottoms here, and then runs to here, so on and so forth. But what you'll find between these runs is, it looks like if we were looking at stock and we saw these 4 big down candles like this, you would think that the stock got tanked like 10% or 15%, right? Because if you look at all the space here, this looks like a big move. But then when you really see it, it's like it fell to 21.18 from 21.69. So 4 days of it tanking nailed you about 40 cents, right? And so that's a lot. And so some of these plays in the dollar, right? Like these are like epic squeezes. Look at all these gaps and stuff. This is like, if this was a regular stock, you'd think, man, this is like a JVA type of move. Except the only problem is when JVA looked like this, it went from $8 to $30, right? This went from 20.89 to 22.07. It's $1.24, right? $1.24 on a $22. $1.24 is nice. I always take $1.24 when I can get it. But on a $22 stock or $20 stock, it's 5%, right? So it's a lot of work to do for 5%. And these type of moves that have happened like this past week, they're not the norm, right? Most of the time, it's just going to be kind of muddling around a little bit here for, a lot smaller ranges. In reality, this was that big drop for the dollar. This, like, you look at the chart, like, shoot, man, this has been killed 50%, and then you realize it's 20.83 was the bottom, and then this is $23. So it's like, that's $2.50 for a whole lot of work. Man, ups and downs. So that's why I don't do it. It's just too slow. And at least on the ETF side. Now, if you're actually trading like currencies in the Forex market, that's a little bit different. The Forex market's like totally unregulated kamikaze land. You can put $500 in a Forex account. They give you like 50 to 1 leverage, and you could day trade the heck out of it. There's no day trading rules. And so then, you can really lever up. And so that $3 or whatever these things are. I think they call them pips or something. It goes up like 10, 15 cents, but your $500 is worth 50,000, so you got all this money in it. Yeah, you might be able to sneak out some gains, but then you can also go bust very quickly, right? Because when you have so much leverage, right? You lose $500 and you're out of the game. So that's why I don't play them. And there's more. The other part is that I'm just starting to feel like I'm mastering, stocks, and so, I'm not even there yet, right? I'm improving every day, and I'm learning new tricks and asking. I talked to hundreds of traders over the past couple of years, and I'm learning new things every day and reading new books and things like that. And so I'm still learning how to be a better trader, and so I just don't to start something off new. At least for me personally, would be very hard because I've made over 100,000 trades the last 5 years. It took me 100,000 trades to learn all these pitfalls and things that I'm looking for now, and these setups and things like that. So I don't even know how long it'd take me to do that again, in a whole different field. Because if you're the master in one field, there's no difference. If you're great at options, or you're great at stocks, or you're great at currencies, if you're great, you're great, you're going to make money. No big, there's not going to be much of a difference. Ricky, do you read the tape while you're trading? I guess yes and no. I don't like watch level 2s and stuff often. I got something in my program so that just show me like who the next bidder is and the next seller. So like, I'm wary of, especially in small caps, people will park at certain levels just to hold the stock down, and then they release it to cause the breakout. So, I'll be wary if there's a big seller somewhere. But I'm not actively reading the level, I'm not basing any decisions off level 2 and things like that. But the reason I do call myself a tape reader is that I can watch the ticker of a market. Just watch the ticker blink up and down, up 5 cents, down 10 cents, and watch the volume move. And I get a very good feel for what's going to happen next and when things are going to go. And a lot of the stocks that I buy that turn into breakouts, most of the time I'm not even looking at these charts. I can get a good feel for a stock after I watch it for a while. And so just watching the ticker move up and down, I'll get a feel for if it's going to break out or not often. So, I'm reading the tape in that way because, I'm feeling it out. But I'm not necessarily focused on level 2 or even like time. A lot of people read like Time&Sales. I know like Thinkorswim has like a Time&Sales thing. And, I'm not really reading that necessarily. But I can feel it when the volume's coming in. Like I can feel it as I see that ticker moving. It's up, ticking, and I'm like, oh shit, this thing's going to go. That type of thing I do. And I'll do watch it. Oh, Chai want to know about panel. I should be asking you about panel. What do we see here, folks? Bum, 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 bum. Get rid of this thing here. So, this stock, right? It's had a run. Right, it already had the run. It had its nice flag, that it broke out of, and it had its big Momo move. The thing I don't like about sometimes these type of stocks, right, is when you get this too far away from the 20-day moving average without ever even retesting it, that to me shows a little bit too much extension without a rest. So there's two ways that a stock can work off its overbought condition. One is through price, aka pullback, like a pullback to the 20-day moving average, and the other way a stock can work off its overbought powerful. And so time can be very powerful. So, if it can base out for a while or pull back, it should be in play. But right here, we don't have necessarily a play via the daily chart. But as we know with this thing, right, it kind of just moves in stops and starts and stops and starts. And so on an intraday basis for day trades, right, there's going to be all sorts of stuff, for day trades. You'll be able to find things all the time. And so, I don't see anything very bullish about it, necessarily, via the daily chart. But, we take out this, you might have a day trade. You pull back here. You might have a day trade. You can see what's kind of happening. Just kind of consolidating right now. Big run up, big pullback. Now it's consolidating. So who knows? Maybe it takes up this 56 level chai. Right? Then you got a nice pop, pop, pop again. But that's, more on a day trade type of thing. Show grid 10. What is all this shit? So keep an eye on that 10-minute chart, 30-minute chart. Yeah, I mean, it's still a very bullish chart. And I'm sure, you if you like a stock and you want to buy it, if you draw enough lines, sooner or later something will connect and you'll have an area to buy it at. At least that's how I always think. So just start drawing some lines, and before you know it, you'll find something. But till it gets over this, it's not in my zone. My other worry is that I guess there's an area there too. Oh, hey, look at that, Chai. If you draw the line a little bit different, bam, you got something. Yeah, like I said, you can always draw a line and make it into a breakout somewhere. So I guess, you know what, Chai, I do like it. I changed my mind. Okay, 20, we got this. Yeah, not bad. We'll see if it thrusts back through this. If it does, 57.70 target. Good job, Chai. We'll stick that on our list. Oh, Charles, I guess what I mean by ticker is not like a scrolling ticker. What I'm watching is usually just... That's how I set up my program. So it's like, I got bid, ask. I'll see the bid size, ask size, volume. Then I use volume percentage is like percentage of its daily average and volume. So I can just watch this and kind of get a feel for whether something is gonna break out or not. So it's not necessarily reading tape, but in a way it is. I mean, I'm staring at this, seeing how it moves, seeing what gets bought, and boom, right? Same type of thing, I guess. So that's it. Anybody else got any questions? Oh, Adam wants to know, what do you think about CBG? Let's take a look. CBG. So this is cool. This is a bottom bounce formation here. We got multiple things going on here. Multiple things going on here. So number one, this is a bottom bounce formation, right? We've got a stock that bottomed. Oh, shoot, man, I never draw these things right. We got this bottom here. I can't draw the line. All right, so we got the bottom here, right? Break, hit resistance, pull back to the bottom, bounce into resistance, pull back to the bottom, bounce into resistance, pull back to the bottom, bounce into resistance, now starting to pull back. Probably the only other, the better part about something like this, now the 20 days coming down and serving as support, so maybe it won't go all the way back to the bottom of the range. 1550, and then tries to bounce, so it's not so extended on a 3-day candles. It seems like these couple day bounces tend to fail. And so, if we can go maybe sideways or something like that, or you know what, even if it just feels like taking it out, sometimes you don't get the ideal setup where you can get a base and then go. Maybe it just, right, it takes out this 1560 level. Looks like 1555. 1555, then you got yourself a nice gap fill here and a bottom bounce, right? So that's not bad. So you got a little gap here to fill that could go to like 1620. Bam, bam, bam. So it looks actually pretty good, but it's got a little bit of ways to go, right? It's got some things to work itself out of. And so use, it's hard to time it on the daily, so use these 1 hour charts, right? And the 30-minute chart to really see the intermediate time frame. And now you got yourself your entry. So it looks like it's actually 1550. Should cut this bad boy. I like it. It's a nice pattern overall. Good job, Adam. All right, Archer, do you have K-Pots look like a morning breakup play? I'm not sure if I had a PR, but there was no action in the morning, so I want to know how you knew how to time it so great. No, there was no PR. This was just something. This was something I had on my watch list. This is part of making good watch lists. I had it on my watch list actually a couple days before, and so I had kept transferring it over to my new watch list every day. So I'd been on my radar for over a week. The one thing, the original buy on, that I wanted to do on K-Pos was buy it on this break of the 20-day moving average. As the market was starting to ramp up and I was looking for bottom play stocks that were former movers that could run. Kind of like, SIFI, right? SIFI was on a bottom right here at $4. Right, and so, right, these former movers, when the market starts bouncing, they all start bouncing. You get these huge bounces, right? These are all former runners. And so K-Paso was on, that bounce list. And, the first thing I want to do is buy it on the break of the 20, but we missed it for some reason. I just didn't think about it, or I missed the alert, who knows. And, but so it had still been on my list because it hadn't gone up as much as I normally see it. Because this stock typically can go on. You see this, historically, when K-Pasa goes, it goes on these pretty big runs where it can go up, it can go up dollars, right? And so, right, all these big runs, right? So I'm thinking, you know what, there's got to be some juice in this thing. You can see here the 6 level is pretty huge. So I was thinking, you know what, well, on a swing basis, maybe this thing goes back to 6. And obviously, we haven't been swing trading much, so I just was looking at for day trade. And so how I time the 477 level is very easy. So what had happened a couple days before, where as this was the day, the stock tried to bounce over the 20-day, and they kind of failed back. And so if you look here, it wasn't exact, right? There's a little bit of a messy stock, but it just seemed like kind of, this level, this 475 was an important level. And then I noticed that, there was a little bit of a spike on a candle here. So then it was 479, I was thinking. And that goes back, for a couple taps here. And so I was thinking, okay, bottoming, I'm looking for some bottom stocks, right? And then I know that this 479 seemed to be, so, right? Boom, 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 buy here, big spike, get out, have fun, right? And that's it. There's nothing too scientific about it. Just key is just, right, good daily chart, align on all time frames, and then wham, bam, thank you, man. I hope that answered your question. I think so. Let me know if that was good or not. All right. So, Samid, to use mental stops or hard stop. When using mental stops, do you wait for another 5 to see if your stop level holds? Hey, that's a pretty good question. Very good question, actually. I'm actually, for day trades, I'm using just mental stops. Unless, I sell half, then I just put a stop at the buy price and just go back to, Facebooking and talking in the chat room and doing all the things I do all day. No, I'm just kidding. I don't do them. I do actually some real work during the day. But for the most part, like say something like K-Pasa, right? I buy this breakout. This is a little bit of a wild stock. It's hard to just say, I'm going to put my stop at X level, right? In my mind, I say, okay, and I believe I said the stop was like at 450, and I might have just kind of said it to say, I just kind of thinking there's like a little bit of base here. Right? And so I'm just, this is like the nearest level of support here, so it's like, okay, well, right? You can buy and then just set your stop. And this was a little bit too loose of a stop, to be honest. But I was in just such a rush to put out the buy because I originally tried to buy it at 470, right at the open, 472. And the thing was already popping the break, and I'm like trying to type it in the chat room, and then buy it at the same time. I'm like trying to type, and I had like 8 buys in because none of them were getting filled. And so I just kind of bamboozled the stop loss a little bit, and that was a little bit of a shortcut on my part that I should be more careful of, but I needed to get the buy in, and then I kept raising up my stop. But normally you're just right. You're using the nearest level of support. Now, if you're like more of a scalper type of trader thing, then you're really, if this breakout just kind of fails, right, then you're using a much tighter stop where it's, you might be using this pivot right here. Right, the last pivot. So that'd be 4 right here. So 464, and you can do that. One of the things when you're just running a chat room and running a business is, you just got all this stuff open. And if it's just a day trade, if it's for a swing trade where I can be very precise with everything, if it's a day trade, it's very hard for me to just zoom into this exact spot and be like, okay, if it falls. This is support. If it breaks down to here, then it's failed, and really nailed exact to the penny. That's why I don't always like giving stops on day trades because, a lot of the stuff you guys got to pull up sometimes because, right? And I'm trying to type it and buy it at the same time and make sure that I don't type it where you guys have to, you guys get the alert 10 minutes late or 10 seconds late, and so I shortcut the stop a little bit by just using round numbers. And looking at the intraday chart and looking for the most obvious level of support, which would be like, something with the base. But, if you're really scalping it, then you can zoom in and look for the last pivot and tighten it up a little bit. And then, a lot of people will say, what, if it just fails, if this breakout fails, it doesn't hold, then I'm out, right? But the thing that you have to be careful of is that some of these stocks are a little bit wild, right? The spread might be 5 cents in itself, so it's like very hard to keep too tight of a stop because the spread itself is 5 pennies. Oh yeah, Ricky, no problem. Boom, 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 boom. Coco. So this is pretty cool. So this is a stock that's obviously had its issues, right? Man, I used to trade this stock when it was even higher than this. I don't know how far these charts go back, but this stock, I believe, this stock used to be 20 something bucks. Woo, right? It used to be 54 bucks. So I mean, this stock has gone basically, as low as it can go. The one thing I will say is that it has bounced, right? This $2 break was kind of important, and it did break over the 20-day moving average. There's resistance, right here, and so let me see the volume pattern. Right, there has been nothing significant on the volume pattern to say, what, this is a epic reversal, the stock is bottom for life type of thing, right? The volume is no more than when it was tanking, right? So it's probably a dead cat bounce type of thing. I don't know if it's just a significant reversal if you just want to swing trade it, but the chart itself is bullish for day trades and scalp opportunities. It's still, a bottoming formation. It's just kind of a low volume bounce, though, so I wouldn't take heed into saying this thing is gone. This thing is bottom for good. And then, just got to make sure. And it's a little bit thin stock sometimes. So you just got to be real careful with it. And then, look for entries, right? Or look for entries on these shorter time frames. So, where are the bounce spots and then where are the breakout spots? And then just, keep mental note of these things. And just keep mental note of these things. Where are the key levels? So resistance is about 240, right? So it looks like, maybe it cracks 225. You got a scalp opportunity at 240. Bam, bam, bam. And otherwise, what, if it does pull back to the bottom of range, that can be a good buy spot too. Speaking of dead cat bounces, YRCW. So this is just more of a trader stock. So they diluted by 10 billion shares, I believe. That's the new float. So it went from a couple 100 million type of thing, or 500 million, to 10 billion. So that's a big float. So what the stock tells you when it's at 7 cents is it's basically dead, right? It's just going to be a trader stock now. And so the only thing you can really do is just wait for day trade opportunities, right? That's not something you just buy and hold. 7 cents equals essentially bankruptcy, right? When you're already diluting 30-cent stocks, Jesus Christ. There's nothing, you're out of bullets. So you can see here, it closed at its lows pretty much, or near its lows. There's just, you see it's going to bounce off these washouts, obviously. You see the washout, then the bounce. But the washout bounces are hard to do. I just don't really see anything that's an advantage. This is one of those things I'd probably trade in secret and not telling you guys, and then lose like $2,000 and then shame everybody in the chat room for doing the same thing. Because there's just no setup. So, I don't know. I just don't see it. It's going to have to do a lot of, actually, it's going to have to do a lot of work. It's going to have to, somebody's going to have to have news, right? They just won like 18 billion in contracts or something. Otherwise, I don't see it. Anybody else got anything to do? Chai, you're usually much more annoying than this with questions. Going once. Going twice. I want to thank you guys for coming. I know it's Sunday. It's a football day. But at least 1/3 of our members showed up today, and I will forever remember that you guys are the ones that want to learn. Going once. Going twice. Anybody else? Oh, CRM. All right. Yeah, I hope you're learning something, Shy. All right, cool stock, cool stock. Came off bottom, ran right in the 50-day moving average. You can see on the 30-minute, the 1 hour, right? This is a very, very strong uptrend. It has not given us any opportunity to buy this stock of late. You can see here on this 1 hour time frame, right? There's a very consistent uptrend. There has been no opportunity to buy it, right? Because we trade setups, and so it's like, you know, maybe there was a kind of a setup here when it broke out of this, maybe, but it wasn't really epic. It's a super strong stock. Broke over the 50-day. That was possibly a setup, but it's very extended. It's a strong stock. That's all I can say. But there's not necessarily a setup, because what we're doing, right, is we're buying breakouts and we're buying pullbacks, to support. And so it just needs a setup. The one thing is, a lot of stocks tend to bounce off their 20 days, right? You can see what's been happening with CRMs. It's been bouncing off its 50 days. And so, keep an eye on that level, right? Every stock has its own story. Some stocks react well to certain things. Some stocks break out well and never pull back well. Certain stocks love the 20-day. Certain stocks love 50-day. So what you want to do is really take all the knowledge you have and apply it to the stocks that you're watching to see if there is something there. There's not always going to be something obvious. You have to sometimes fiddle around with stuff and look. So it looks like this 50-day looks like to be the spot right now. Ah, good call, good call. Yes, that is true, Rick. Anybody else? Going once. Going twice. And we are out. Boom, 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 boom. Oh, MCZ. Man, Charles, you love these little turds. You remind me of myself. These, all right. Washout, big bounce, right into resistance, pull back, bounce on resistance, fail, bounce on resistance, fail. I had a move here somewhere, and then it failed. I don't know what's going on with this stock. You can see here the way the chart looks. The volume is so dry on it right now that it's hard to play. I don't see anything in it. So a stock like this, how you play it? If you see its friends running, cool runs, glue runs, right? All these things are running. Then it's one of those things where you're like, I'm buying MCZ as a laggard play, and then you don't really care about the stock. You just care that it's a laggard play. RPTP, I think this one looks cool. Why can't I even put this on my watch list? Good reminder, buddy. I had this on my watch list intraday on Friday and did not add and forgot about it today. So this thing is hot. This is what I like. Breakouts on multiple time frames, right? Let's get this bad boy back in here. Right? So this 485 levels, important right here. Right? Boom, boom, boom. So we got a breakout on the daily. If the daily breaks out, then what we want to do is just align it on multiple time frames. All right, so then you can see on the 5-minute, this 482 seems to be the spot, which coincides with the daily. Nice. And then, right, 30-minute chart coincides with the daily, coincides with the 5-minute, so very nice. And then we've got this 30-minute here, coincides with the 1 hour, which coincides with the 5-minute, which coincides with the daily. So you've got a breakout on multiple time frames. Bam, 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 bam. I like it. Good job, Archie. All right. Going once. Going twice. And we are out of here, folks. Email me if you got any questions. I will try to get this webinar up on the computer